Let's get some analysis with Judo Bank Chief Economic Advisor Warren Hogan. Warren, what do you expect the message will be from the Governor today?
Yeah, hi, Kieran. I don't think that the Governor will change much at all. We've seen her be very consistent on this all through the last 6 months, including a speech from just a few weeks ago. And that is that the economy still faces inflation risk. Inflation is not back to target, and although they think we're going to get there over the next couple of years, that's no done deal because we're in a completely different operating environment where we have very little spare capacity in the economy post-COVID. And therefore, they've got to be very careful with how they do policy. So I don't expect to see any change in policy or any change in their view. And this is important because we're going to have the biggest break between RBA meetings that we've ever had. It's not going to be until, as Ed said there, in late February that we get the next meeting.
So given that break, it's crucial they've got the settings right across this summer period.
It certainly is, and look, I think they do. The cash rates, there's no strong case for it to move in either direction right now, given their view that they've been giving us for the last few months. The data we've seen has been mixed, but there are good signs of a recovery in consumer spending. But we do have our challenges with productivity. So I think the key here is the message they send. And the problem they have is that there's obviously a lot of people talking about rate cuts. The markets are pricing rate cuts. This is, well-worn path, of course. But if they start to sort of, pull back on the message from the last few months, that'll really give that talk some momentum. And it's a whole summer, lots of barbecues, Christmas. Everyone's going to be talking about it in one shape or form. And they don't want to sort of give people an idea that they're about to cut rates when they get back from summer holidays.
Well, given the hard work really that they've done to this point, why would they relent in the face of that campaign? Because it seems it would be counterproductive to their message and their efforts over recent months.
Yeah, that's exactly right. And of course, a big part of monetary policy is, the messaging and the view that you put out into the community. And by saying that, or pushing towards this idea that, we're going to cut rates soon, makes it even harder because, what does that mean for the housing market? What does that mean for spending? So you're exactly right. And look, the RBA, I think the main message they've got to get through to people is this sort of very politically charged environment heats up in the next few months, is that they are not doing what they normally do. They never took interest rates up anywhere near what other central banks have done, what they would have done in the past. They're trying already the best they can to preserve employment and not crush the economy. And I really don't think that message has got out to the community just how different they have done this. And it's not about raising rates too much. It's actually about raising rates less than they would have. So I think that's a good reminder for the broader community that the RBA is trying something different, and it's all about trying to keep people in jobs.
Various voices have been saying that the RBA needs to start reducing the cash rate to preempt where the economy is going, pointing to the anemic economic growth and other indicators. Why do you believe that's the wrong course of action? Shouldn't central banks be getting in before economies shift one way or the other?
They certainly should, and that's really what the difficulty of monetary policy is. It's got to be forward-looking at all times, and the RBA is, and they're trying their best. But the propositions being put forward by various commentators to say why they should be cutting rates immediately are based on very shaky grounds. I mean, the idea that the labour market is weak is just not right. I mean, whether it's public or private sector jobs, there's still a jobs boom going on. And this idea that interest rates are high, again, it's just not right. They're high compared to where they were 3 years ago, but they're not high by any broader historical comparison. And of course, we're all amazed at how well the economy has dealt with this massive increase in rates. So look, I don't like the propositions that these calls are based on, and I think they're actually not motivated by what's the right thing for the economy. I think there's other motivations driving these views.
Yeah, so other motivations? Can you elaborate on that? I was about to wrap it up, but that sounds interesting. Is there any? You want to go any further on that?
Yeah, well, look, we know how politicised monetary policy is. It's been getting more and more politicised in the last 25 years. And at the moment, the political frame, as you know better than anyone, is a rate cut is great for the government. A rate hike would be disastrous. And maybe, given the polls, steady monetary policy is a real problem for them. So there's a whole cohort of people, economists and otherwise, who want to see a rate cut. And that isn't based on any view of what's best for our economy. It's based on a political view. And I think that's very dangerous. And we're at a critical point, and the RBA has got to resist these calls and explain why they are dangerous calls.
Judo Bank Chief Economic Advisor Warren Hogan, appreciate it. Talk to you soon.
Thanks for your time.